Earning reports, debt ceiling, economic data. What are they mean in these days? What we have to do? Hello, this is Ahura and I'm with you with another daily outlook, with another daily market review. Let's see what is happening in the market, what is going on, and what we have to wait for today. Yesterday, again, we saw that the Wall Street closed at the new high levels in the past weeks, not the new record highs, just they continued the gains of the last days, in the past days. Why? Because of amazing earning reports. Earning reports, as I mentioned in the last days, will for this week and the week ahead will be the main market drivers. Most of almost more than 80% of yesterday's reports they all beat the expectations. And now, especially 100% of the big market caps. I mean, the biggest market caps of yesterday's earnings, 100% of them, they beat the expectations. These much better, amazing reports are moving the markets to higher levels. But at the same time, we had the new coronavirus infected cases up to 50,000 yesterday. And also at the same time, we had more than 800 dead in Western European countries. All these numbers, besides the yesterday housing number in the US, is telling us that we have to take care about the market. We have to take care about the economic data. What we can see in the earning reports is what happened in the last 3 months, in the past quarter. What is going on in the market is this warning. Yesterday we saw after 3 months of increasing housing starts. Past days we saw that decrease again after 3 months increasing in new, not just the housing start, even for the approvals that we had in construction approvals, all of them. Construction approvals is falling, new housing starts is falling, selling the pending house selling is decreasing. All these numbers is telling us that the reality of the economy that we are in right now is a little bit different with the earning reports that are the result of the past 3 months. So while that's what I'm talking about, that I'm saying that for this week and a week ahead, while we are taking care about the market, while we know that increasing in better than expected earning reports, moving the market to the high levels. The question is, can S&P 500 keep this way? This is the S&P 500 chart. As you see, it's increasing. It's increasing in the past. Let's see. Let's go to the just zoom it out. You see that it's increasing since this date, October 12th. This is October 20. We have 1 week in a row, six trading days in a row, 6 working days in a row, 6 trading days in a row that the S&P 500 increasing, incredibly increasing. And this incredibly increase is just the results of the better than expected economic earning reports. But the economic data, what the economic data says? Economic data says that while despite yesterday's yesterday we had API report. API report shows that the last week, in the week ended at October 16, last week, we had more than 3.2 million increase in the oil inventories. The oil inventories increased in the last week more than 3.2 million barrels, but still the oil is increasing. I mean, even after the report, this is after the report. This is after the report. You can see that it fall, but it didn't fall even. Couldn't even touch the yesterday's low, and still it's increasing. And if you go to the 4 hours chart, you can see that the oil price is still increasing. This is the reality of the market. This increasing oil price will make more problem, will cause more problem in the transportation cost. This transportation cost, energy cost, and production cost, all of them they will be the reasons that we have to wait for next 2 months to see the, especially, as the reports we are waiting for the coldest winter in history. So this coldest winter in history with increasing demand for the oil and gas, while we have the shortage, all of them, they will bring more shutdowns in factories. Even if we don't have a shutdown for the coronavirus, we would have the shutdown in the economy somewhere because of the energy prices. Some productions will be slowed down. Even if not the shutdown, they will slow down their production. So next 2 months, guys, will be the time that we have to take care about our positions. So if you are increasing, if you are in a profit in these days, take care about your positions in the stock market, especially. And about this what will one of the reasons of this data that I mentioned, it will be that you can see that the gold listen is the US dollar. This is the US dollar chart. US dollar is increasing in the last days. As I told, the stock market is going fine. So we can see the decrease in the US dollar chart. But in the long term, US dollar is still increasing. US dollar is in a clearly uptrend. And especially if we can return about the 94, which is so possible in next week, the uptrend can be continued. So for today, let's talk about the today. Today, still we can see a little bit more ease in the US dollar chart. This ease in the US dollar chart will cause the gold to increase, but at the same time, the positive stock market will stop the gold to increase more. So the gold also moving over, just like if you go in a 4 hours chart, you can see that the gold is really moving over, is moving never, just with no exact and special direction, as long as we do not have the clear path in the market where to go. So next 2 weeks with the earning reports, this weekend and next week with the earning reports, and then with FOMC meetings on November 2 and 3 will clear everything for the next months and even for the first quarter of 2021. So the market direction will be clear after that. Till that time, stock markets will be increasing down and up with no exact, like I cannot say what happened exactly. It's depend exactly directly to the earning reports. But after 2 weeks, we can see the weakness for 2-3 months. For now, this is what we can see. Gold will be for now. Gold will be still confused movement with no specific direction. US dollar will ease in a little bit, but in total general uptrend. So it means that it can just creating the better buy position for the stock markets. For the stock markets, next 2 months will be the especially before the year end, it will be the better buy time. But for now, for today, still we can see the little bit ease, and then with the better with the U.S. cash market opens, we can see again increase in the stock markets. In a Bitcoin, and so with the approvals of the ETFs and stuff like that, the Bitcoin and some other cryptos, altcoins, they got some supported. But this is not the first time. It's not the first ETF in the state. We had that before in Chicago. So we don't. I'm now waiting to see the Bitcoin in longer, higher prices. If you go to the daily charts, you can see that still in a daily chart, from the technical point of view, daily chart, H4 chart. In the H4 chart, we can see the desired movement. You can see the RSI in the H4 chart started the desired movement. OBB trend line is falling in the H4 chart. In 1 hour chart also, it's almost the same. You can see that in 1 hour chart, we get this new all-time high, new high, also like higher highs that we are creating here, all-time high that we are creating here. It's not creating a new all-time high, so it's not creating a next higher high. So the next higher high is time to sell. So this is the selling time for the Bitcoin, I think. So from the fundamental and technical point of view, OBV's higher high is lower than the previous high, so it's creating like lower high, while the chart is creating higher high. OBV is creating a lower high. So and RSI is creating flat in both H1 and H4 chart. The Ripple and other altcoins, the Ripple at the other time, the Ripple is increasing. Ripple, I can see the H1 chart is increasing. We can see almost the same thing in H4 chart, but a little bit with the weakness in a little bit more in H4 chart. We need to see the Ripple more than $1.16. For Ethereum also is same as the Ripple is increasing, but just the weakness is for the OBV. You can see the OBV strength line actually is decreasing in Ethereum, while the RSI around 55. The price is a side movement. Ethereum also has a weakness. In the Euro USD, as I told, since the US dollar is used in currency markets, since the US dollar is increasing, US dollar is under pressure. Well, while with the US dollar is under pressure, we can see that Euro USD to decrease, Euro USD to increase more a little bit around these levels. Today in the in the earning reports, as I told yesterday, for the earning reports was amazing day, and all more than 80% of the earnings, they were better than expected. Tesla today will be in the spotlight, while the Nestle, Verizon, the Nextera Energy, IBM, they are all important today to watch for the earnings report. Some of them before market opens, some of them like Tesla after market opens, after market close, they will report. So today again, the earning reports we will have very crazy and very busy earning reports. While in the economic data is inflation day. Today everything is about the UK inflation, and then after the UK inflation, let me talk about first about the yesterday. Yesterday we had inflation. We had housing data in the state. As I told, the housing numbers, it shows that the new approvals and the new housing starts, building starts, housing start, no matter what, is falling after 3 months increasing. It is falling, and we can see a weakness in the stock in a housing market. New housing starts and approvals. API reports, as I told, it was much better than expected, much more than expected, and increased 3.2, 3 almost 3 actually, 3.3 million barrels last week for the weekend in October 16. The other important thing today earlier we had Chinese Central Bank of China interest rate decision, and it's they hold the rates at 3.8% of 3.85 actually, at 3.85%, no changed. And later today we will have the inflation numbers from the UK, EU. EU, do we have from Europe? No, we don't have from Europe. We have from UK, and then we will have from Canada, if I don't mistake. Actually, from the EU also we'll have today's we will have inflation numbers from the EU, UK first, and then from the European countries, and later we will have this inflation numbers in Canada as well. And later after the inflation numbers in Canada, in the US season, we will have the EIA reports for the oil market, which the energy investors and the traders will be follow that very closely. And Quarles, Fed member, Fed Quarles will have the speech later before market close. And finally, the beach book will be published today, last hours of the market. So this is the generally what is going on in the market. So still the data that today we have to take care about is the inflation numbers, as I told, very important, the inflation numbers in most of the developed countries. And so far so good, the market is going fine. The PBOC Bank, People Bank of China, didn't change the interest rate, and trade balance in Japan was less than expected. And trade balance in Japan also is a little bit. The Japanese new prime minister also USDJPY. Let me, where's the USDJPY? Let me talk about the USDJ, explain something about the USDJPY. While the Japanese, the Japanese new prime minister had some package of this, he has some stimulus packages was to try to help the economy. At the same time, the data shows that the Japanese trade balance was lower than expected. It puts the Japanese yen under pressure. At the same time, increasing, the U.S. 10 years bond to U.S. 10 years bond yields increased yesterday again about 1.65, more than last week's high and more than it's like 4 months high. We're in a U.S. 10 years bond yields, so almost 1.66 almost percent. This puts the yen under pressure because the yen, the Japan is going to sell the yen, so buy the US dollar to buy the US 10 years bond yield. So it means that increasing in bond yields will affect the Japanese yen as always. So Japanese yen is in its in its weakest position in the last months. So the Japanese yen is under pressure. US dollar is increasing in generally at the same time. The bond yields, increasing bond yields also puts the Japanese yen under pressure. This is the overall what is happening in the market for USD JPY. We can see the same levels a little bit higher or around these levels of between between 114 and 115. This is something that we need to see in the next days in USD JPY chart. Thank you so much. See you guys tomorrow. Don't forget to follow. Don't forget to subscribe, like, and comment under the video and tell me what you exactly want to see and hear for the next days. So I will talk about that data as well. See you guys tomorrow. Bye.